Welcome, dear traders. You are watching a recap of the Asian session. Stock exchanges in China, Hong Kong and Singapore are closed today on the occasion of International Workers' Day. Japan's stock market operates today, but it will be closed tomorrow for a long holiday. The country will celebrate Golden Week. Japanese, Australian and New Zealand stock indexes kicked off Monday with solid gains. Both Japanese benchmark stock indexes reached their 8-month highs. At its meeting last Friday, the Bank of Japan kept its monetary policy settings unchanged. It also stated that it would hardly abandon ultra-easing in the near future. Nevertheless, the regulator modified its forward guidance by removing reference to keeping interest rates at the current or lower levels. Besides, there are no reasons for the Bank of Japan to revise its policy stance. According to recent reports, inflation dropped to its lowest level since August 2021. The country's economy continues to recover slowly but surely. For instance, the PMI manufacturing index reached a 6-month high of 49.5 in April. It was the sixth straight month of a decline in factory activity, but the softest one in the sequence. According to the monthly economic report unveiled last week, energy prices remained relatively high due to import costs. The number of bankruptcies also increased. The government also warned of market turbulence due to the banking crisis in the United States. The banking crisis is again in the spotlight as the First Republic Bank is on the verge of a collapse. Back in March, it narrowly escaped bankruptcy, unlike Silicon Valley Bank and two other regional banks. Overall, 11 top U.S. banks injected $30 billion in deposits to rescue the lender. It mitigated the crisis, but not for long. The earnings report revealed that the bank lost more than $70 billion in deposits. Its shares plunged by almost 50% overnight. Since the start of the year, they have plummeted by more than 97%. Analysts expect the Federal Deposit Insurance Corporation to take over all assets of troubled First Republic Bank. So far, before making trading decisions, investors have taken into account three factors: earnings reports, macro stats, and the monetary policies of the central banks. Now they should also price in the likelihood of the banking crisis. It may affect market sentiment significantly. Now, traders are looking forward to the Fed meeting scheduled for Wednesday. The regulator is likely to hike the key rate. As the CME FEDWATCH tool shows, almost 90% of speculators have factored in another 25 basis point rate hike. The US dollar resumed an upward movement amid these expectations. The euro, on the contrary, lost ground due to the uncertainty over the ECB's future plans. Inflation in the eurozone remains stubbornly high, and traders want more clarity from the ECB. The greenback was moving in the bullish channel of 101.60 and 101.90. At the end of the Asian session, it was trading at 101.90 against its main rivals. Other major regulators, such as the European Central Bank and the Reserve Bank of Australia, will also hold monetary policy meetings this week. The Reserve Bank of Australia will announce its rate decision on May 2. In this light, the US currency may lose its momentum until the Fed meeting on May 3. Besides, the US dollar could also climb as a safe haven currency if the prospects for the global economy deteriorate. Trading floors in Japan will be closed when the Fed, the ECB, and the Reserve Bank of Australia hold their meetings. Golden Week will begin on Wednesday, and markets will reopen on May 8. The yen started the two-day trading week with a fall. It's now lacking any drivers. It also dropped due to 2-day steady rise of the US dollar. And the dollar-yen pair consolidated in the range of 136.10 and 136.9 in the Asian session. It grew to a high of 137 from a low of 136.10, so the yen settled at 136.80. Its further trajectory will largely depend on external factors, risk appetite, and fresh US economic reports. However, many traders are revising their portfolios in favor of the yen and other assets amid concerns over the US banking sector. The Australian dollar climbed to 0.6637 in the morning amid these fears. What's more, it's also growing higher ahead of the Reserve Bank of Australia meeting. However, given a slowdown in inflation and steady economic recovery, the central bank is widely expected to keep the rate unchanged. Yet, some investors are still betting on a rate hike. Therefore, the Aussie was moving gradually in the price corridor of 0.6608 and 0.6646. Moving away from its 6-week low. There were no bullish factors that could have spurred demand for the New Zealand dollar, and the Kiwi dollar pair was moving in the downward range of 0.6166 and 0.6192 in the Asian session. The Kiwi started the month in the red zone, trading at 0.6176. And that's all for now. Hit the subscribe button and keep close tabs on the market developments with us. See you soon!